Where are interest rates going to go? In this video, you're going to get my latest interest rate predictions. Hi, I'm McKnight, an economist at Opes Partners, and you're watching Property Now. The day I'm recording this video, the one-year fixed interest rate is about 7%, depending on which bank you use. Some are bang on 7, some wee bit higher. Now, this is exactly what I predicted in this video 4 months ago. Now, we're unlikely to see much of an increase. I expect that the one-year rate will hang around 7% for the rest of the year, but once we get into 2024, we'll likely see that interest rate gradually fall to about 6%. By mid-2025, I'm picking 5.5% and then 4.5% in 2026. So interest rates will likely come down, but it's not going to be tomorrow or the day after. It'll happen slowly over a couple of years. But you probably want to know, well, why do I think this is going to happen? And if that's you, you clearly like to learn about property and investment, so you should definitely subscribe to our channel. We release new videos every Monday and Wednesday. And if you do already subscribe, you'll know that we're about to dive into the details. Interest rates are high because inflation is high. The Reserve Bank's job is to keep inflation between 1 and 3% in this band, but right now it's right up there at 6%. Now, this data just came out the morning that I'm recording this video. So inflation is coming down. It peaked back in June 2022 last year. But even at 6%, it is way outside of the target band. Now, inflation leads to higher interest rates because, firstly, if prices go up, then workers like you and me, well, we start asking our bosses for more money. That can force businesses to put their prices up since their costs are now higher. This causes even more inflation. It is what we economists call a wage price spiral. Secondly, as prices rise, the money in your bank account starts to be worth less. You can't buy as much stuff with it. So investors start saying, well, I want a higher interest rate if I'm going to put my money in the bank. So banks are forced to increase your mortgage interest rate because it's costing them more to borrow money off someone else and lend it to you. But the third one, and the one that you probably already know about, is that the Reserve Bank will also increase the OCR when they see inflation, and this pushes your and my mortgage interest rate up. You see, they're trying to increase interest rates so that we're paying more to the banks for our mortgages, and the banks then pass that return on to savers, which is who they generally get most of their money from. Now, together, all of these factors mean that some of us feel the pinch, and so we're forced to spend less. On the other hand, savers, they're encouraged to start saving more, which also means spending less. Now, when that happens, there's less money being spent on the economy, so prices don't go up as fast, and inflation, it starts to come down. Now, once inflation is defeated, that's when interest rates will start to come down. Now, you might say, Ed, are we really going to see inflation coming down? I mean, it is coming down, but 6% is still really high. Well, one of the reasons why inflation is likely to come down, especially over the next 3 months, is all about how inflation is calculated. So if you look at inflation on a quarterly basis, the last 3 quarters, December right through June, prices haven't increased as fast as they did the previous 5 quarters. Now, once we get into September 2023, this really expensive quarter in September 2022, when prices went up really fast, that's no longer going to be in the calculation. So even if prices just go up as they have for the last 3 quarters, we're still going to see that annual inflation figure is going to start to come down. And you might think, well, what does that mean for interest rates? Well, look at all of those reasons that we talked about. Those 3 main reasons that interest rates are increasing, they start to go away. Workers won't need to argue as hard for pay rises. Investors don't have to hold out for such a high return. And it also means that the Reserve Bank doesn't have to raise the OCR quite so much. So interest rates, they can start to come down. So when are interest rates going to come down? Well, it's not going to happen straight away. It's going to take time. And it also depends which interest rate you're actually talking about. So the 5-year interest rate has actually already peaked. It peaked 6 months ago, way back in January 2023. And since then, it's fallen by about 1/10. The 1-year interest rate, on the other hand, it still is yet to show a really clear peak. And if we look at ANZ Bank's interest rate forecasts, we can see that they expect the 5-year rate to fall a little bit, but they expect the 1-year rate to fall by a lot over the next 12 to 18 months. Now, what that means is that some rates are going to fall more quickly than others, and it's going to be those short-term rates. And the reason behind that is inflation and the OCR, they have more of an impact on the 1 and the 2-year interest rate compared to those longer 4 and 5-year interest rates. Here's another question I want you to ask yourself. Are interest rates high? Well, you might automatically say yes, but it also depends on which rate you're talking about. And this matters when we're thinking about, well, where are interest rates going to go now? Right now, the 5-year interest rate isn't that high historically if we look at where have interest rates been since 2009 and after the GFC. The maximum that the 5-year rate's been is about 8.7%, the minimum about 3.1%. Right now, it's about midway between them. So the 5-year interest rate isn't that high and it hasn't got that much room to move. Compare that to the 1-year rate. It is the highest it's been since 2009. Now, what that means is there is more room for that 1-year interest rate to move. So when we're thinking about interest rate forecasts in the future, what's going to change? Well, those longer term rates, the 5-year, the 4-year, they're probably not going to move that much as we head back into more normal times and inflation comes down. What's it going to impact? The shorter term rates, the 1-year, the 2-year rate. And that's why some investors are saying, well, property prices are quite low at the moment, and that's because interest rates are high, but they could fall away soon in the next year or two. And that's why some Kiwis are saying, well, I actually think now's the right time to invest in property while prices are low. Now, if that's in your head as well, head across to our website, opespartners.co.nz, and book yourself a portfolio planning session. We help regular Kiwis grow their wealth through new build investment properties.